Alright team, I'm live on YouTube and I'm live in the virtual trading floors, so let's get it started. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group as the broker-dealer. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure has not changed. And let's get into it. So market here really moving higher as soon as the market closed on these blurred comments. We're over $1 up in the SPYs from where we closed at. Trading at 439.13 right now. We closed at like 438. So yeah, we're ripping higher here on these blurred comments. I don't know. I'm probably... No, SPYs here. I'm probably more down today for whatever reason. I don't necessarily mean P&L wise. I mean just kind of mentally. I feel pretty down and defeated today, and I'm probably feeling that way more than I should be because we had some, once again, some pretty good call outs in the morning meeting today. A couple really good intraday trades were called out in the VTF as well. So even on these tough, tricky days, we're finding our spots to pick and be able to make some money for us, and there were some good setups out there for individual stocks that worked. I'm tired of being a broken record on this market, and I'm tired of telling people that we're in a difficult spot and it's choppy and less is more and all that type of stuff. It's not the market I want, but it just is what it is right now as we kind of build things out, and again, we expected the market to be tricky today, like I discussed in the morning meeting, and I chatted a little bit at 3 o'clock when I came back onto the VTF. There were factors here that are saying we should go lower, but there are also some factors that are saying, hold on, let's take a pause here, maybe not today, maybe not right now. And as a result, it's just really hard to have conviction. I thought last week was one of the toughest trading weeks that we've had, honestly, in a long time. The intraday price action, especially last week on most days, seemed to have almost little rhyme or reason to it. And honestly, today's intraday price action was kind of a continuation of that. But again, that's what you expect when you're looking at multiple factors that are bearish and bullish. The technicals here as of Thursday's close, because we were closed on Friday, absolutely look really bad. We're looking bearish. We're still at that, it goes back to retracement rules. I think is something important to pay attention to. I'm not a believer in like perfect Fibonacci numbers or anything like that, but I am a believer in the principle that's behind Fibonacci retracements. That's why I keep like roughly looking at how far we've pulled back on this upward move to see, how healthy or unhealthy it is. And the SPYs here have pulled back, like 50% or so of the March move. The Qs and the IWM are probably going to be a little bit more than that. But we pulled back 50%, which is not actually bad in and of itself. But within the confines of that, especially with the close on lows on Thursday, I would say that small and medium time frame for this market was certainly looking bearish coming into today from our bigger picture technicals. With that said, with the way that we closed on Friday, closing at lows, it put our small time frame tactical sentiment indicator that we like to pay attention to solidly in that buy zone, especially because we had a common gap down this morning. And for me, even though I'm looking at this market and I'm saying, hey, you know what, the technicals in this market are starting to look really bearish, when I see the market, that sentiment indicator kind of in the buy zone, to me that means I need to be really taking pause and being very cautious on my shorts. It doesn't necessarily mean come in and buy. It more means to me, hey, don't short. You're really going to need downside momentum, and it's coming in a major way to pay you. And even with that, I did have some shorts on the radar. Lucid, I think a couple of you guys caught this actually, which is great. We talked about Lucid as a short, I think roughly versus Thursday's low. which worked out pretty well. I think I actually wrote down short below 20.90. So, Lucid worked out really well as a short here, right off the open for small risk on anyone that kind of wanted to take that. Tesla was also on the list for a short today, though that one did not work out. I thought the Tesla looked really bad on the break of Thursday's low, which it was able to do this morning. And I do think that there's a case to be made, like I discussed in the morning meeting today, that what Elon is doing in Twitter actually could be bad for Tesla. But this stock has been so notoriously difficult to short. I think we're all well aware of what Tesla's performance has looked like over the years. But at one point here, Tesla was kind of cracking and breaking down, made this. I really liked the short actually right in here at 950, even though I didn't take it. You had this opening high, this little bit of a lower high. This is when the market kind of ripped up a little bit. And then this inside 5 and down off this lower high. And that is then clearing also the inside day low. So actually, I really liked the idea of, what I'm always trying to do, which is take the big picture, have the big picture tell me kind of the direction and the key levels that I want to be, but then using the small picture to actually be able to execute the trade. So the small picture, I think, setup is really great here on this inside 5 after this lower high for downside continuation. And then this thing was looking really bad at lows at whatever time this is, at 950. And then that's when your NASDAQ started to lead, right? The Qs here, if you guys remember, this is all I was talking about all morning here for the first. I was on the radio till 11:15, but pretty much all morning it was like, okay, the NASDAQ is looking really good here, and we understand that some of these seasonality effects and things like that could lead to a strong market, but we never had confirmation. Eventually, SPYs here were starting to close above 439 in the small time frame, which is what I was looking at. But the IWM really never gave that confirmation, was really never able to get above that 198.50 that I was looking at outside of a little blip here around 2 o'clock, which was also just part of the choppy price action of new lows to new highs to new lows to, closing at the midpoint of the range almost. So that is, Twitter. So that is, kind of also the factors that I want to see, right? Like, again, I know that the market technicals are looking bearish. I know that short-term sentiment indicators in the buy zone, though, which helps counter that a little bit, at least on the small time frame. And we also discussed seasonality, which I always like to, take with a grain of salt. That seasonally, this is like the strongest week of the year. So, there's a reason for that, I'm sure. It doesn't necessarily mean just come in and buy, but it's another factor we got to pay attention to. So I'm like, all right, can I just get the market to give me any sort of confirmation here? And I got the Qs improving, got the SPYs improving, but this IWM, which I really think was representative of the market today, because the other factor that we were able to really notice when the market was breaking higher here at 1020, the NASDAQ was up like 0.75% here at highs, yet there were more decliners than advancers in the market. So breadth was certainly not fantastic either. So I don't know. All of these factors just were battling each other, and I thought just made it a really, really tricky day today because we could go higher, we could go lower, flip a coin. I don't know. But again, maybe I'm just being a little bit overly negative today because we, as a team, were able to identify some, really good trades by being selective and picking the right ones. This LCID from the morning meeting is a short, worked out really well. I know the execution on the BAC was difficult. I had originally mentioned in the morning meeting being long versus the pre-market low, but we basically opened below the pre-market low. What was the opening price here? 37.42. I think we opened like right at the pre-market low, and it put in this quick tail here. I thought that the Bank of America earnings report looked great, and the other thing I liked about it, I talked about this in the afternoon meeting, one of the afternoon meetings I think last week, about when a stock is really beaten into the earnings report. A lot of times if a stock is really beaten into the earnings report, beaten up into the earnings report, and they even just kind of meet expectations, it'll trade well. let alone Bank of America, which I thought put in a pretty solid earnings report and is also, over just the course of a couple of weeks here, traded from $44 to $37, which is a pretty big move for BAC. So I really liked the idea from a qualitative, fundamental perspective, if you will, of buying the stock. But we still also want to have the actual technical confirmation for the trade. And my thought process was just to be long versus the pre-market low. But again, we basically opened at the pre-market low, and then but one of you guys called out really quickly. I think the stock was trading at like 37.30 something, going long versus 37.22. So whoever did make that call out there in the first 5 minutes of the day in the VTF, that was obviously a fantastic call out, because this did lead to really good follow through. Josh is here today. I gave Josh praise, as you guys all remember, in that one afternoon meeting, and then I was like, oh, I hope Josh isn't listening, because it'll go straight to his head. So I guess Josh was there for this one. And then we talked about, this SYF. I know that this SYF was a bit sloppy here at 38, I think, as it opened, kind of trading back and forth, and I didn't have it exactly on my radar. So I don't know if like the opening low on it held perfectly, but if you were able to get stock here in the first few minutes and didn't get pushed out at the low based on wherever your stop loss was, or you got stock through 38 versus this low, and this one also gave great follow through. And this, by the way, guys, this is the benefit of earnings season, because on a day like today, when we're looking at the market and we're like, man, this market just looks so difficult here. It's really all day. There was never a point in time today. Usually I have at some point in time, I get some conviction on the market in one direction or another on what's probably going to happen. There was never a moment in time. There was never 5 minutes today on the market where I had conviction that we could continue higher or continue lower. When we were at highs here and I was still in the VTF and communicating, I could not have conviction that we could break higher because the IWM was not participating. Most stocks out there were not participating. Even when we were at lows here at midday, I did not have real confidence in downside continuation at that point because of the factors that we've discussed. And then we're back up, it's just so choppy. We're back up trying to recapture 440 again, just for the market almost to randomly. It seemed this rollover here, it started right before 3 o'clock. It just seems so random to me. Like nothing was going on, and now out of nowhere it's just red bar, red bar, red bar, red bar, red bar, red bar on the 5 minute, just kind of over and over and over again. And then I think I saw Pat say that MOCs were $1 billion to sell, and then we rip on it. So I don't know. Definitely a trading session where I am. I don't want to say frustrated, but I guess frustrated is the right term. It's just tricky. And again, you can't do anything about what the market gives you. You can only control what you do in regards to it. So what did I do today? I did not much. My volume today is, here's a tactic that I recommend to traders, right? You should, if you've been trading for a while, you should know kind of what your average volume is in a typical day, and you should know, and it's probably going to be a range, like a low end to your range of your average volume and a high end of your range to the average volume. And what you want to see is on the days where you've got a lot of conviction, that you really push it, that you trade a lot, that you go for it because it's the only way to make money. So you want to see on those days when we've got a lot of conviction, there's a lot of opportunity, that you are at the upper portion of your average trading volume range or even beyond it. And on days, I guess more like today, that are more difficult and we don't have the same conviction, even though there were a few good individual trades out there, you want to be seeing at the end of the day that you're at the low end of your average volume range. Now, I'm today even below the low end of my average volume that I typically trade. I traded very, very little today, which is what it is. It honestly probably saved me money, though I guess I could have done a better job being involved in BAC with some of you guys and that lucid short call out, because that was honestly that was my idea from the morning meeting and I wasn't involved in it. But for the most part, you know, I probably saved myself some money today by being pretty passive with my trading and just trying to wait. I was just trying to be patient. I was just trying to wait until the market could give me some sort of conviction. I never got that conviction. I never did much, and in the long run, I know that's the right thing to do. So that is all I've got for you guys today, which is not too much, but it doesn't make it not important, and I'm happy to answer any questions that you guys have. Is Twitter really ripping here after hours on that? Where did Twitter close? Not even up $1 on it. These companies are playing right into Elon's hands, right into his hands. He's just going to be able to sell his stock at higher prices. Thanks, Steve. Appreciate it. Yep, SYF, if you're able to get stock, was decent. Think Pat indicated he was bullish on Tesla going into earnings. Do I have a technical point of view? So Tesla earnings, I think, are on Wednesday. I don't really have too much of a thought process on what those numbers are going to look like. And technically here, on the one hand, you have still had continued amazing relative strength from Tesla. On the other hand, I would view these technicals as kind of mainly neutral until we break the consolidation. And then, you know, once the earnings report actually hits, then you really never know. It could even if this thing starts looking really bullish technically into the report, that could just evaporate if those numbers are no good very, very quickly. So that's that. What else, guys? Any other questions? Yes, still pretty crazy that Bullard's comments brought this market higher here after hours. Are we above the intraday high right now? Or we're just about at it. This 439.50 that we've been struggling with all day. Bullard's comments ripped us up to it. What about the Qs? Qs, same thing. Back above 340 right there in that spot. What about this stupid IWM that does not want to participate? Still below 198.50. Yeah, I think on Tesla we wait for earnings. You know, I thought there could have been a good momentum day trade to the downside today, but there was no follow through. From Josh asking about Oxy. Is Oxy still in play after today's candle? Yeah, it is. You know, you don't love the tail here, but it's not so bad. It's not so bad because we still closed above or at kind of this key 61 area, I think, which is where this wedge is breaking to the upside. So I think that Ox is okay. I know this was also one on our list for this morning. And it's worth bringing this up because I know a few people got shaken out. It is what it is. I think that if you bought Oxy in the first couple minutes of the day and you got shaken out off that opening low, I think you did the right thing. I want to start by saying that. So anyone who got shaken out of Oxy and then was probably super frustrated 10 minutes later, you know, you bought Oxy. I don't remember what that. I wonder if I can see it in that 2-minute chart. That first opening low before it kind of filled that gap there, as the XLE also filled its gap. Yeah, you can see it on the 2-minute. If anyone was looking at this and bought this Oxy off the open at, let's call it, I don't know, 60.50 or something, and it, you know, rips all the way higher to 61.18, and then you got stopped out when it made new lows, just to then watch it absolutely rip. I just really want to reemphasize that you traded it correctly. You really did nothing wrong, and it just is what it is. With that said, we also do need to recognize something that I always say, which is that, you know, I actually want to reference that price. What was that price? The first opening low here, 60.21. Yeah, so the ADMA had not caught up to 60.21. So when the ADMA on the 5-minute chart doesn't catch up to your stop loss, you are relying on momentum to pay you, and there's a higher probability of a shakeout occurring. And that, unfortunately, is exactly what happened. And it was really caused by the XLE. This first XLE candle closed so bad, and then that caught a bit also, that this Oxy, which was actually trying to outperform the XLE, got pushed down also to trigger those sell stops, and probably this tail here is a bunch of y'all's. I just said y'all. I must be really becoming a non-New Yorker. Must have been a bunch of you guys' stop losses here that were triggering. So yeah, you did the right thing. It's just when that ADMA doesn't catch up, you have a higher probability of getting shaken out. That's why in those circumstances, first of all, if I see the momentum's looking as good as Oxy looked right away, I'll use that stop too. And other times I might use I'll still use that stop, but maybe I'll use 2 outs. I'll use some with my stop loss there, but I know that the ADMA hasn't caught up yet, so I want to keep some a little bit looser, and I'll give some down maybe to a gap fill or even to like a little pivot from the close on the previous day type of situation until the ADMA actually catches up. So that way, and again, usually what's going to end up happening is you're not going to get shaken out. The momentum on this Oxy off the open was so good. Usually you're not going to get shaken out. It's going to close well, and the ADMA is going to catch up to your stop loss, and you're solid. But again, there is a percentage of time when you can get shaken out because the ADMA didn't catch up, and then it goes. And by having that second stop loss, even though it's a lot more risk, so you're taking away from your position sizing and things like that, can be beneficial under this circumstance. But I don't know. This was very, very tough. Looked fantastic when it first opened. Then this XLE closing on the candle low, and I know it's just a gap fill, but this looked so bad after this candle closed like this. Then for the XLE to catch a bid and Oxy obviously then just absolutely rip was certainly difficult. So. Why would be market like 75? What? Aaron, I'm not fully following your question there because I feel like your English was a bit of a struggle when you typed in the question. But I don't think that the market really was pricing in 75 basis points hike at all. It had priced in 50. They don't want a 75 basis point hike. So I think that Bullard coming out and saying that the Fed is not likely to do that is just a little extra reinsurance that is helping this market. It seems like he's trying to reassure the market that we're going to try to do things slowly and appropriately. I'm getting a little nervous actually that the Fed is going to make a policy mistake on the other side of things now, where they're going to end up over raising us into a recession potentially right as those natural factors that we've talked about that could bring inflation down start to actually happen at the same time. But we'll see. Robert here saying, can we go over Oxy? Okay, perfectly. I just kind of did it. I opened long once we triggered the inside day. However, I got shaken out, but we held 60, which was my important level from the 30-minute time frame. Reopening long which was my important level from the 30-minute time frame. I reopen long versus the current low again. Yeah, so I basically just went over the whole trade there. So I hope that your question is kind of already answered. I don't know if I'm going to retake the trade like you're describing, to be honest with you, because it's a very dangerous game to get shaken out of stock and then rebuy it. I know for myself personally, it's always important to know yourself as a trader. I have a bad habit if I allow myself of fighting stock, kind of a naturally a fighter, right? So if I get stopped out of things, if I get shaken out of things, I naturally want to fight it and rebuy it back. So I tend to not let myself do that because I will sometimes find myself in the situation where I buy the stock, I get stopped out, I go, oh man, it's just a shakeout, I rebuy the stock, and then I get stopped out at a new low, and I rebuy the stock, and I get stopped out at a new low, and I rebuy the stock, and I get stopped out at a new low, and in that case, I would have been better off just buying it one time and giving it even more space to begin with. So that's why I go back to what I was saying earlier about you could try to potentially use 2 stop losses if the ADMA hasn't caught up type of situation. So that would be how I approach it. If you are disciplined enough to be able to appropriately, rebuy or something like that, go for it. Generally, I only want to rebuy stock if a new trade actually sets up. what would be a new play for Oxy? I think you want to. I think you want to be swinging stock at the end of today. To be honest with you, I think you want to have stock from above 60, and you don't have a tremendous profit cushion, but hopefully you're $1 in the money, and you booked enough, and you're swinging it. I don't see a new buy setup right now in Oxy until it resets up. Yeah, AR was up and TEL was down, which is frustrating because TEL is the one that I'm in. Yeah, so I don't know. UNG just... Oh, this is interesting, actually. This is not a great-looking candle here. We might have a high-volume shooting star finally in this UNG, which could indicate a pullback, because this thing was going completely parabolic. AR has gotten a little bit too extended for me as well, so I'm disappointed that this TEL was as relatively weak as it was today. Because if AR and UNG start pulling back, the relative weakness on this TEL could cause this thing to fail. For me now, I really don't want to see TEL lose this pivot low from the 11th, which is $5.36, especially now that the 21 EMA caught up to it. So we'll see if UNG and AR start having a bigger pullback, and that applies pressure on TEL, which already acted relatively weak today. You could have a problem, and I hate that this TEL closed below 6, by the way, especially on a day when those types of stocks were generally strong. And 6 was the spot that we'd been paying attention to. I think a bunch of us bought it on Wednesday, and it didn't get any follow through. On Thursday it broke, but it broke midday, and it was a little bit tricky. From Jerry, yes. Also on Oxy, how do you take appropriate size when buy is immediate at the open and your out is above the 80 EMA? Well, you do the same thing, I think, Jerry. You know, you still take your size based on your space risk and the amount of dollar risk that you want to put on. So you still do the same thing in that regard. You just maybe want to, as far as your risk skew goes on trades, you probably don't want to be going maximum risk skew on something where the 80 EMA hasn't caught up to your stop loss. So whatever you're deciding for your dollar risk, you'll still take that size that corresponds to, you know, where you're buying versus where the stop loss should be, as best as you can. From Policing Pips, got chopped around in the Nasdaq today. Would have been nice to stop trading by 10 while I was up. Yeah, I'm with you there. You know, that's why we expected today to be choppy. It was choppy, and definitely a less is more type of trading session. You got to know when to be able to take a half step back. Bullard is open to a reverse twist. Wow. How do you resist that urge? Yeah, it's not easy, honestly. We all want to be trading, you know. We all want to be trading. It's, you know, we're professional traders, right? We're sitting here in front of all these cool screens with all these cool charts. We want to be trading. I think that the best way to resist the urge to overtrade, especially if it's midday or the market's not giving you an advantage, is actually to do other things. And when I say other things, I don't necessarily mean go for a long walk or go shovel some snow or something like that. So sometimes, honestly, that can be built into it a little bit. When I say other things, I mean, you got to recognize that the market's difficult and say, you know what? Instead of desperately searching for any trade that I can get my hands on right now, why don't I sit down and actually do some bigger picture research? Why don't I, you know, research some of these companies that I've been eyeballing to get a better understanding of their qualitative fundamentals? Or, you know, why don't I, you know, catch up on your favorite, you know, markets related research, blog, podcast, whatever it is, other busy work where you're still productive, but you are not actually pressing buttons and forcing trading. So that's a lot of what I like to do. You know, sometimes it is actual research like that. I also, you know, it's a benefit in this regard. A lot of times it's also a curse. You know, that I head up business development for T3 Trading Group's equity and equity options business. Especially for me, because I usually will do some emailing on weekends in the mornings, and I was just away this weekend, so I just had like like 175 emails in my inbox, and I was just looking at the market, and I'm like, this market looks terrible. I got some meetings today. I don't see any advantage. I've got all these freaking emails, which some of which I'm still not caught up on. So I apologize if anybody's emailed me over the weekend or today and I haven't gotten back to you yet. So I just looked at the market and I was like, I don't have an advantage. So I got 175 emails in my inbox. I guess let me start typing away here and getting some things done. So yeah, I hope that helps a little bit. Robert has one more question. When you say you need to see a new trade setup, it means you need to see a new trade setup. No, not necessarily from the daily chart. On the intraday, if the daily chart is still intact properly, you know, again, a lot of times we're taking our cues on what we want to do from the daily chart, but the execution is actually going to be coming from those small time frame charts. So you're finding a small time frame trade that's in the face of the bigger picture. So for me, a lot of times when I'm referring to a new setup, I mean a new small time frame setup that can get me back involved in the stock after I've gotten shaken out or the trade failed or whatever, provided the daily chart itself is still intact. And also, honestly, we know that when a stock gives a really big, fast momentum move and then gives 100% plus retracement of it, that the probability of a new high that day is actually very low. Now, it's a little bit different in Oxy's case because that was a momentum move followed by a new low, but it still could be a shakeout because the ADMA hadn't caught up yet. But if you get that sick big momentum move and the ADMA is caught up to that low and a new low comes in, then it's generally just not going to be something that you want to buy, even if there is a new intraday setup. So, you know, you got to pay attention to all those factors at once. But generally what I'm talking about, to answer your question, Robert, is intraday. From Mike L here, what is reverse twist, and has the Fed been successful in the past in implementing it to bring inflation down? I think that someone tell me if I'm wrong, but I think that the idea of a reverse twist is a brand new comment that has never been used before. Operation Twist, not Operation Reverse Twist, if I remember correctly, was a dovish stimulus impulse of the Fed in the past that was used to, I think, lower long-term interest rates. I'm trying to remember. It's been a while since I've done my Operation Twist research because I haven't needed to. But I think that they were doing it was timed. They were buying purchases of different U.S. Treasuries of different maturities to, I'm trying to remember what the actual goal on that was on as far as like the yield curve. It basically had like a stimulus effect on markets, you know, because the Fed, once you bring interest rates down to zero, they kind of have to turn to other policy tools. So an inverse twist or reverse twist, whatever they're calling it, would be the opposite. From PMD Trading, what keeps me in an ETF like Labu when the technicals get as gross as they did today? I like to keep core positions in things, and I'm not recommending this to other people, but I will sometimes rot in like a smaller core position, like a smaller position, to keep an eye on things that I have a broader interest in. And that's the problem with, you know, I don't love, and I don't really recommend people look at like the positions indicator here in the VTF, because it just tells you what I'm in. It doesn't tell you my sizing. So, you know, you might not know, for example, in like Labu, that I had gotten almost all out of my stock on this day when it got to 1956, because 20 was my profit target and my target, and it almost got there. And that was originally from stock that I had up here at like $13, that I rebought that stock into 15 because 15 had been so important. I know that there's a couple tails here at 1463 and such. But then when, you know, your support level is failing like this, that can be a cue to me to size back down on the buying that I did off that level when it was kind of retesting it. but not necessarily get all the way out. You know, because if I've got really good stock here still from initially, at least some from 13, I'll ride on some of that core all the way back to these lows, and sometimes even into new lows. Because even, you know, with this pullback here to 1230, by managing position sizing and getting the move that I got, there's no reason why you shouldn't be green in this. So, you know, if I'm able to size down while still being green in it, and I can keep it on my radar, and it's kind of back almost into this next level of support, that's something that I'll kind of do all day. So, and this XB, look at the volume on this Labu today. It's interesting. It almost did seem to me like at a certain point that some of these growth stocks, I know Labu and XBI are not growth stocks, but they tend to represent a more risk-on, volatile sector of the market. Some of them really looked like they were almost given capitulatory volume. You know, we had a good trade in SoFi also on this heavy volume on this break of 7 here, super heavy volume, and I called out the buy on the way back, and I understand if people didn't get involved. It's hard to have a conviction in a stock like this at all-time lows. But I was looking at Labu's volume. I was looking at some of these growth stocks volume. I was looking at SoFi's volume. I know Pat bought pins. And I'm looking at the volume on this thing as it trades back through $7. And I'm like, you know, you could take this for 4 cents risk here. And it never broke that low. So you could have held this all day. I don't know if you would have wanted to swing it. But it definitely gave a great initial pop here and didn't close terrible, but definitely not what you wanted. It couldn't recapture that $7.30 that we were looking for. But I digress. Yeah, I thought that Labu volume was very interesting, but this thing was so weak. Oh my god. This XBI was so weak. And usually it trades, at least with some correlation to the Qs. I tend to find that, you know, it just tends to be higher beta, the XBI in general. And then obviously Labu is that on drugs because you know, 3 times leveraged ETF of an ETF that is representative of a pretty volatile sector. So Labu managed to be down, you know, 13% right now as I'm looking at it. But yeah, this XBI was so this was one of the things I was pointing to, honestly. The things that. The reason why I didn't start getting a little bit more bullish here at like 10:30 when the SPYs and Qs were looking better was because the IWM was not, and I thought that the IWM was going to be more representative of breadth. And then Pat confirmed that with information. And honestly, this XBI, I'm just seeing how weak this was, and I'm like, how can we have a risk-on rally when you know, biotech is doing this? And this thing just got absolutely slaughtered, really, really bad. So I hope that helps there with your very valid question there, PMD trader. Operation Twist is a Federal Reserve monetary policy initiative used in the past to lower longer-term interest rates, kind of what I was saying, to further stimulate the U.S. economy when traditional monetary tools were lacking via timed purchases and sales of treasuries of different maturities. Yep. So I was able to remember that one pretty well here. Yeah, reverse twist. Okay, let's do the twist. Flip it and reverse it. Justin here, I had square short as one of my ideas. Yeah, I remember we spoke about that. 120, and it was a very valid technical trade. My only counter to it was that squares, I've been biased towards the growth stocks that performed really well on their earnings report as a general rule. And Square was one of them, and Upstart was one of them. And I've tended to be biased towards these stocks. Whenever I think growth can catch a bid, these have been kind of my favorites to look at because of how they traded back then. And obviously, you know, this Upstart is looking terrible here, down to $82 at this point. But that's kind of been my general broader thought process. But to go back to your question here on Square, having it short today was one of your ideas. Yep, we discussed in the morning meeting. You got pushed out in the move, and you were worried to try it again because the market looked ready to rip. Would you try it there at 10.25? No, probably not. So basically what he's saying is, I had on my game plan short square, I think through 120 was what we discussed. So he's getting short somewhere here. I hope you got your risk covered. I'm sure you did. I hope you got even more than your risk covered. And then this thing made a new high, and you were appropriately greedy, and you gave it all the way back, and you got pushed out of some literally at highs. Would I re-short at 1025? I don't think I would. First of all, to go back to the early conversation that we had about needing a new trade setup to actually take a new trade, because otherwise you find yourself fighting, I see no new trade in here to get yourself short. That would be the first thing that I would say to you. So I don't think it would have been appropriate at all. And then secondly, I agree with you. You look at what the NASDAQ, you got this thing making highs, and not only is this thing making highs, but a lot of other growth stocks were not. So this thing is making highs, which is also showing relative strength, which goes back to probably my bias that I already discussed. And at the same time here, you've got the Qs starting to hold above 350 and looking really good. We never got our full market confirmation, which is why I never had conviction, but there was a very real chance here that these Qs hold above 340, and that then causes the IWM to play some catch up, the IWM that gets above 198.50, and now you've got a rest in the Qs, a rest in the SPYs as the IWM plays catch up, and then this pattern here breaks out to the upside, and next thing you know, we're working our way back up into more of Thursday's range. So I think that you did a great job by not reshorting Square, despite the fact that it went down to new lows. It's the right thing to do. All right, looks like I got through the questions today. So, good stuff. Hopefully this market gets a little bit better, a little bit more conducive at some point in the near future so that I can be a little bit more excited in our meetings. But the good news is we are starting to step into the hot part of earnings season. And, again, a couple of our best ideas from today, Bank of America and SYF, they come off earnings reports. So we'll have something hopefully to focus on day to day, even if the market stays tricky as we go into earnings season here. That's it. Have a great night, everybody, and I'll see you all tomorrow.